The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman. This is the Wednesday edition, Wednesday, August the 6th, and a very interesting session overnight. The futures were just about unchanged. Then all of a sudden, they started dropping and dropping and dropping. This morning early, they were very sharply lower. But interestingly enough, the Dow right now is up 53 points at 16,482, having touched. Was that the target line? I was so busy with everything else, I forgot to actually mention. Oh, yeah. Just missed our target of 16,341, the low that was the May 5th low in the Dow, 16,341.30. And yesterday's low was 369.55, so it missed it by some 50 points, 20 points. And today the low was slightly higher, and very interesting because there's that dashed pink trend line, that what I call the Chapman wave inside wedge trend line support. It hit it exactly today. And when I showed the Dow, the diamonds 120-minute chart, what I said is we're really close to a bounce, because within 1 to 2 sessions of breaking the left side low of 164.01, you want to see a bounce right back into the arch formation. So a lot of the aspects that we were looking at, and one of the reasons why in my opening call, that's my daily service, a very comprehensive look at the markets every single day, starting at about, I would say 6:30 to 6:45, I start sending out charts to my site at TFNN, the opening call, based on the Chapman wave methodology. Now, what's really interesting about this is there's been almost a full arch formation return, almost 100% give back of the gains, going to the 17th of July high of 17,151. And one of the reasons why we were very fortunate, we've been in some good positions lately that took advantage of the first time that we've been able to take advantage of the sentiment indicators. Let me just move this away. Here you can see the volatility index, which screened up to the 17.57 level a couple of days ago, pulled back to 1469. And yesterday, when the Dow was making a new monthly low, the VIX refused to break above 1757. It stopped right there at 17. Well, yesterday it went to 1714, and today it went to 1730. And that volatility index, which we went long, took about a 30% profit in a chunk of our positions, and then went back in full on Monday on the long side of the volatility index. This morning, early in the morning, at about 6:30 to 6:45, I just start taking profits off. And then for those who couldn't get out and had to wait until the opening, you got a slightly better price, even with about another 20% gain. So those were working really well. Now, I want you to keep a core position on the short side. So we short the Dow. We've taken all our gains off. There was another smaller gain that we took on the position that we had on the long VIX index. We're now out of that. But most importantly, we have the inverse volatility index. And I'd like to try to keep that. We'll see if that's going to hold or not. Otherwise, we got real nice gains there, some of which we took off the soft. We took off again today. So this is a very interesting period. Why? Because everything that I was looking at, look, let me run the numbers. The Dow is up 48. But look at the support. Look at the stochastic starting to at least attempt to flatten out in the teens at 16%. Look at the MACD. Huge divergence between the price coming down. No, it's not a divergence. Huge parallel motion with a fast-moving average, very wide. To turn to the upside would take days and a huge move, something like the E-minis going to 19. They're up 7.5 right now, going to the way over 1936, probably 1940, and then you'll get that MACD to maybe cross positive. But it's this pattern here in the arch formation in the Chapman wave methodology. What we look at is the bar that goes below the previous left side low bar of importance. That's 1910.25 back at the beginning of August. A break below says that that bar or one bar later, you should start to get right back into that arch formation. That's exactly what the E-minis have done today. So, bunch of questions I had. I'll answer them like this. Dow. Nice little bounce off the lows. 120-minute chart says, yep, this could rally, but I'm not sure that it's going to, any rally would have a tough time at 16,559, the high of yesterday. Between there and the high of the fourth at 16,596, I suspect that if I had to draw in some kind of a pattern right now, it would be another arch formation, or what I call the lowercase h, right there. The S&P, SPX.X. S&P is up 4.81. It went to a low this morning of 19.0. First of all, E-minis went to a round number low of 1903. So the cash index is at 1911.45 as a low. Right now it's bounced. Wow, it's bounced 13 points. That's a lot of points to the upside. The 120-minute chart suggests that the 1927 to 1939 area is going to be very strong resistance. However, the IWM is actually looking quite a lot better. Look, the MACD is starting to flatten out. The stochastics made a beautiful divergence, a positive divergence between the trough E at 109.86. Type that in, 109.86. And so that's a rising stochastic, a lower price, and a flattening out of the MACD. That says the IWM could, in fact, fill the gap between 112.99 and 113.31 at the end of July, beginning of August. And it's trading right now up 57 at 111.95. And it'll be leg D in the 120-minute chart above 112.23. Very interesting. Weekly charts in all cases are looking terrible at this particular point, IWM especially. So this is a strong counter trend potential. No, I shouldn't say strong. It's just a counter trend rally that could make another H that goes maybe to an M pattern, lowercase m. So let's go on. And there was a question about the NDX 100, which corresponds to the QQQ series. Well, if you look at the 120-minute chart, it went below the 200-period exponential moving average in leg E, and it's probably going to make a trough E, and it's testing the 200-period moving average at 3,883 and the 3,889 9-period exponential moving average. Looks to me like the index could have a little bit more of a bounce. 3,910 would be the 9-period exponential moving average resistance. On the daily chart, you've got a peak E right there on July the 24th of 3997.50. You've stopped right at the 200-period exponential moving average. This uptrend line is now pierced. It's going to be resistance, and that was to there exactly. In an inside track resistance area. Now it's the lower parameter, and what we're looking at is there could be a bounce at 39.10, which you get it a little bit above. I don't like to make it messy, but let me just draw this because that's part of the techniques that I use right there. So it corresponds. The NDX 100 could in fact bounce to the 39.10 to 39.20 area. Oh, it's going to be a little tough, but we'll see if it's able to do that. If it does that, and the weekly chart is making a peak E, but I have not yet been able to put a down arrow because the stochastic has not gone under 80%. At 89% is still very strong. And that's the stochastic. The MACD's fast moving average, the 9-period differential, is in fact still quite positive. So that's that. Now let's go to gold, GCZ. I'll go to the Z contract. That's December. Really nice spike to the upside, up 24.20 at 1309. What's even more important, let me just double check. Yep. Now, what's really important about this is the 1313 area, 200-period exponential moving average, which has been tremendous resistance the past couple of weeks. If that is pierced, that'll be very important. So we don't have many long positions. We don't have any long positions, regular stocks in our in my Traders Corner part of the opening call, but we do have one gold stock, which is doing okay right now. We bought it at the low of the day. Let's see how that works out. And I said that this is to trade because it's a very low price stock, just as we use in the VIX for percentage gains. But in the VIX's case, we're trying to stay there as much as possible for long time positions whenever we can. And we might be getting back in very soon and try to hold that position even longer. Meantime, back at the ranch, GC, the gold is acting very well. The GLD, nice bounce. 126.32 will be the resistance. I'll get to it in greater detail in a moment. And let's just look at the dollar. The dollar right now, dollar DXY. Dollar is in legs G/C. Everything about this says that the dollar is within 3 days of having a digestive phase. That even if it goes a little bit higher, it should be pulling back, and 81.27 to 81.12 will be the support that needs to hold. I suspect that will go. It'll test the high 80.80 to 80.90 area, and then perhaps gold will be finished. We'll see, because the reason why I wanted gold is I'm a little suspicious about what's going on in the Ukraine, and I think that gold is just preparing to have another one of those sudden spikes to the upside, sort of surprises everyone because it's overnight, and I'd like to be there for the stock bounce. That's all. And then we might have to get out very soon. So a couple of things here. EUR, USD, in a leg E, very close to a little bit of a bounce. And if you look at the USD JPY, that in fact has made a peak C, but it's really struggling to get to a leg D above 103.077. So let me go to Jim in Lakeland, Florida. Hi, Jim. How are you? Whoops. Jim, you there? Uh-oh, don't tell me I had, whoops. Jim, I hope you can call back. I think we just did something, and you waited so patiently, and then just as I got to you, boom, you're off. Anyway, you want to look at the GLD. What I'm going to suggest is anytime you get back on, maybe you're on the road. At any point, if you get back on, just give a yell. But in the meantime, I'm going to treat it as if, what would I do right now with the GLD? That's really the question. I think if you're along, that's fine. But I'm going to just treat it as the GLD, the Spider Gold Trust series is trading at 125.83, up $1.97, up 1.59%. I still believe that the pattern that I identified a year ago, the H pattern that just keeps going to a lowercase h, then a lowercase m, is still in force. It'll change a little bit if GLD breaks above 129.21, and if it goes to 133.15, 200-period moving average resistance in the weekly chart. I'll be back. We'll talk about a little bit more when we get back. Basil Chapman, Tiger Technicians Hour, Dow's up 33 S&P's.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 50 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're looking at the GLD trading at 125.86, and the question, I believe, is where's it going to go? It was Jim in Lakeland who had a drop. I believe he was on the road, so it was a quick question. So there's this big gap in the GLD from the 11th of July, where it closes in the 120-minute chart at 128.76. And then it gaps down the following day. On the 14th, it gaps down, and it has a gap between 126.03 and 128.70, almost 3 points. That is really big. That's one of the biggest declines that I remember seeing in the GLD. Gold, I think, dropped 36 points or something like that. That was huge. Now, what's happened is you've made lower lows in the 120-minute chart, going all the way down to 123.23. Let me just type that in. 123.23. And you've just had the spike to leg B. But wait a minute. It's done that every time since then, since that big gap, since the at 11:30 on the 15th of July, it made a double bottom, and then it goes peak A, a big strong into the gap, leg B, and goes all the way to 127.55. Can't take the strain, pulls back, gaps below the 200 period moving average. It goes down a little lower to 123.90 at 11:30 on the 24th of July. Pops up peak A, peak B, fails again. comes back down to a low, 123.23, and that was the low of just yesterday, was it? No, a few days ago, 31st of July at 123.23. Picks a nice gap up, goes, boop, all the way towards the 120-minute chart, can't hold it, pulls back, but it makes a lower high as the technicals are improving, and that, in essence, is what it's done every time. It's had this big spike up, but it hasn't had the veracity, it hasn't had the strength to continue moving up and making higher support levels and higher highs. This is the first opportunity that it's going to have to do that. But at 126 round number high, it's above the 125.93 previous high on that big B minus reverse. And of course, all of these are the lowercase pattern, that H pattern I just talk about all the time, either the rectangle or the arch formation. Just unbelievable how many times you can see. You know, there's just a few basic patterns. There's the arch or the cup. That's the inversion. You've got the V or the inverted V, or a straight line move. Or it goes sideways. But even sideways, if you're going to a smaller time frame, there's no such thing really, because it's moving up or down. So now look at this. We've got another H, but this time there is a difference. Why? So far, we've gapped up without breaking to a new low. That is really important in my work. Why? Because in the Chapman Wave methodology, my CD introducing the Chapman Wave methodology, CD book, which has 27 chapters and 476 slides. There's a whole section that's really, I call it the dreaded H, but now we mostly call it the H pattern, lowercase H pattern. That's chapter 17 for those of you who are new to my work. And basically, I look at these patterns repeating over and over. Look, there it is. Scallop formation comes down, lowercase h, comes down, breaks the lowercase h left side low, comes down again, and breaks the left side low. But then it can become a rather large arch formation. And that is an arch formation that takes the lowercase h and merely extends the next arch into another h, which makes it an M, lowercase m. Well, lo and behold, look what's happened here. You've gone H failure, now H success. So it's a lowercase h, but it could altogether turn into just another big H pattern. So this is what I'm looking at. The question is, what would I do? Would I buy or would I sell? Now, in gold especially, I do not like to buy gaps on the upside or the downside. I also don't like to buy a leg B when every other B has failed, except for one little thing. If you go into a smaller time frame, and I'm going to go into the 10-minute for now. Let me just finish this. I'm using this chart here. This is what I call the naked chart. Remember, in the Chapman Wave, we look for the lowest, most identifiable low bar and merely count each successive peak. When you get to the fourth highest peak, yes, we've got to be careful, but in fact, it doesn't have to turn there. It could continue by recycling higher. It could go to a D, an E, and even an F, and then you've got to be expecting a sharper pullback. We have just gone to an F, and now we're getting so far, it looks like the deepest pullback, and this is the E-mini. For those of you looking at the charts, here's another one right here. Let me just do this quickly. I can't resist it. I see the chart. I've just got to do the notation. Should be automatic, but I'm finding that in the automatic, you're going to land up having more problems than not if you don't do it really carefully and you apply a bunch of rules, and the rules might change. 16, 17. I'll be right back. We've got leg D right there, and then I'm going to continue talking about gold because I want to show you what can happen in a shorter time frame. I'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Folks, we're back. Excuse me. We're back, and the Dow is up 32. S&P's up 3.87. And we're looking at the GLD, which is up 198 at 125.85. It is suspecting that there is a little conflagration that might be occurring right there in the Ukraine. And by anticipating that, gold is up some 20, what was it earlier on? Yeah, $23, $24. Now, this is very important because in the 10-minute chart, what you should have is you should be able to test to see whether the gap low, which in this case is 125.69, is taken out, and if you bounce right back into the rectangle formation, which is what you've done. Went down a little bit lower. You went down to 125.65. Trading right now 125.82. You've got a peak A and then a peak. You've got a peak A, and now you've got a B. It's also an alternate wave count. So I'm suspecting, what would you do now? Now, how can I do this? I thought about it during the break, but I wasn't satisfied with my answer. I was going to suggest just starting a little position here and giving it a stop. Yeah, okay, this is the best way that I can think of doing it. Every other peak B, two of them so far has failed and gone to lower lows. This is the first time that it's been successful in that the low on the right side is above the 123.23 low on the left side. And that says you can bounce, but you've got to bounce above the previous arch and hold that for at least 2 out of 3 bars. Well, this is only the second bar, but it is over the previous low. Most importantly, if the GLD at any point this week trades, doesn't even have to close, it just has to trade above 127.55, the high of at 1:30 on the 17th of July, and that says, aha, going to fill that gap, or at least attempt to fill the gap all the way to the 128.70 level. Here's my thinking. I'm going to make the suggestion that if you want to buy the GLD, that's fine. I'm going to make the suggestion instead you buy the IAU, which trades, the GLD trades at 1/10 the price of spot gold. The IAU, which we used to use in my for my subscribers, trades at 1/10 the price of the GLD. So I'm going to make the suggestion that start on the lower price one. It's going to do the same percentages. And this point is up 1.52%, up 19 cents. And I would just start a little position. And the reason why is I would only want to add to the position if it took out 1269, the high of the day. This is the iShares Gold Trust. And 1269 is the high so far today. If it takes it out even by 1 penny, I would add just a little more. And the reason why I would rather have small positions is that because of the failure pattern, unfortunately, we really have to wait for this to extend and then make a high-level consolidation by making higher. So far, it's making higher highs and higher lows. It hasn't done that before. I like that. That's the reason why I'm saying start a little position here. And then I would add just a little bit more. And my stop, interestingly enough, my stop would be at 1266. I would have a stop at about 12. I'd like to say 1262. 5 cents, that's nothing. 3 cents, 5 cents, I'd have a fairly tight stop. Why? Because if it starts to break down, I don't want to be part of this yet again for another just a B minus. But if it actually starts to show strength, I don't mind increasing, and some of the gold stocks are acting very nicely. So I hope that answers your question. So here we go, one more time. I've got a question about a BRK, which just happens to be one of the very important stocks in the stock market. It is Berkshire Hathaway B shares. And this is a real tough one. I don't ever recall seeing this particular pattern before. I'm sure it's happened. I just don't remember it. I do remember seeing the chart formation as it applies to an expanding wedge, but that's different to the lettering. There is no way that I can call this anything but a peak A at an all-time high, and so far it's holding. Well, if Berkshire Hathaway, which owns every medium in the economic field, not every, but you know what I mean. It's there, and from insurance to bank to whatever it is. I definitely have this as a leg C in the weekly. I can't rename it. That's what it is. And my monthly chart, having made a high of 129.73, has gone to 130, and that means it's in leg F in the monthly chart. So I'm quite positive on this. I don't think there's all that much in price. Maybe another 3%, maybe another 5%, but it doesn't matter. It is in leg F, and look here again. You've got this pattern. This is a very potent pattern. It is the wedge pattern, and it's the asymmetric triangle, but it's got a different pattern because it's going from left to right instead of right to left. And basically what this is saying is I could rally, and I could rally to the 131, it's at 129.16, 131 to 133 area. But that weekly chart says probably this is a peak A in the daily, because all it needs to do is go 1 penny above the 1303, 130.03 high, all-time high of the 4th. That was 3 days ago. Yep, and it starts leg B it can't be slash F because from wait, whoa, where was that buy signal? Yeah, because it went under 124.06. Now you cannot start. You cannot. It's a flat base, unconventional flat base restart. When once in a while you fractionally take out the initial buy signal low bar, but that's a particular pattern which this corresponds to quite well, but it isn't. And in this particular instance, this is just, I can only call this leg A and then peak A. And that implies that it could fail, it would be an unusual failure, but there's a better chance because of today's action that it's going to take out 130.03 by 1 penny, at least 1 penny to start leg B. It's going to break above this trend line, and then that trend line is going to have a new trend line. It'll be expanding, and it'll look something like that. And it should go to D in the daily chart. So if Berkshire Hathaway has still got a little while to go, we might have seen a bulk of the selling pressure right at this particular point culminate, and we don't go very high, but the best stocks start to move up again, and the worst stocks just have a little nominal bounce here. That might be the rotational correction unfolding here as a corrective rally, very selective rally. So that Berkshire, I'm pleased that the question came up because it's a very important chart to look at. 120-minute chart has a leg B, and it'll start leg C above 130.03. So that's the way we're looking at it right now. The whole thing fails if Berkshire Hathaway trades even for one split second. It hits 126. That's just 3.3 points lower. It just has to hit 126 once. And then all of a sudden, we're looking at this candle right here. It says, be careful. You get to the 124.50 anytime in August, you're going down to the low. So far, it really does look like it wants to trade a little bit higher to complete a leg B and then a C and a D in the daily chart. And that would have to take, at minimum, into late next week. So I hope I covered that. Now, let's just do this. There was a question about the VIX index. In the VIX index, Z in the den, I hope you got that analysis I did on the NDX. So this is very interesting. The volatility index trading now down 5.5%, down 0.96 at 1591. Didn't make a new recovery high today, but it did go to 17.30. 1757 was the high for 4 days ago, and the MACD is still very strong, and stochastic is very good, but a little bit too toppy for my liking, and we've got a peak G in the 120-minute chart. And what does that say? It says that we could be pulling back between 15.91 right now, between the 1520 and the 1469, I'm going to say 1440 area over the next couple of days. I would not be surprised if it actually dips just once into the gap up low of 14.26 made at 11:30 on the, what date was that? On the 31st of July. So that's the kind of way I'm looking at it right now. Right, this is in the Chapman wave methodology. Look there, the MACD is deflecting lower, the stochastic's making a right shoulder failure, and the price is making a right shoulder failure. Hey, what is a right shoulder failure? A right shoulder failure, chapter 21, is in fact right there. And what does it look like? It looks like this. You make a peak, a significant peak, D, E, or F, pull back sharply, and then have a rally that does not have the strength of the MACD and the slow stochastic. So that's exactly what we're looking at here. Look, the stochastic and MACD are failing, so the VIX should be pulling back until these guys strengthen, and then it has another pop-up. And that might take us until today's Wednesday, maybe even Friday, who knows. So we could have a couple of days of a nice bounce. That's the way I'm looking at it right now. So then there was a question as well. Those are the parameters I'm looking at on the VIX index. Now, what's really interesting is, you know how I've spoken about in this particular pattern for weeks and weeks and weeks, in fact, for over a year. What we've seen is that the bar that goes to or just above the 200-period moving average, especially if it's a green candle, has the following bar, the following week that is a reversal candle, and it could be either just a red candle. Most of the time, it is a powerful turn down. So we're going to be seeing whether or not this is going to be, look, it's exactly what we got on Friday. Snuck above, closed just about, it's just a little below the 200-period moving average in the weekly chart of 17.23. And then yesterday and today starts off the red candle. Didn't make a new high. But what's really important about this is that the stochastic and the MACD are starting to show the kind of strength that says there might be sustainability to this particular move up in the VIX. Question about the T-bonds, TLT. TLT is trading right now at 114.90. Nice candle early on. Now it's pulling back. And will this turn into a right shoulder failure pattern, just as we were looking at before? Well, so far there hasn't been a deflection lower in the MACD, daily MACD. Stochastic's only at 49%. That's very weak. Yes, it could be somebody watching this, and I usually draw in the two fighting patterns. One is this one here, lowercase h. Remember, you just see these patterns over and over and over. Having made a higher peak D doji high at 116.07 on the 29th of July. Pulls back to the 113s, bounces to the 115s today. 115.47 is the high. Trading right now at 114.86. Now so what I'm looking at here, let me just do this on a larger scale. This very big cup formation that broke out and went to the D and pulling back could be producing yet another handle, or cup formation. So it's going to be an H pattern that is a successful one if it pulls back and bonds don't break below 113.68-ish. It may give it 20 cents or so, but somewhere around there. But instead, by Friday or Monday of next week, Friday this week, Monday of next week, turns around, starts to go back towards the 116.07 high that was just made. That's going to be really important. Weekly chart says we're in F/A. The MACD's at 86%. That's good. Sorry, the MACD is strong. Stochastic's at 86%. So far, it's a high-level consolidation. We'll see, because under 113.78, it breaks under the 9-period exponential moving average in the weekly chart. So just before we go to a break, there was a question about yields. I wonder if I can get this up in time. TYX, because I don't have the chart up. Yeah, look at the yields. This is so interesting. Here's the daily chart of extent. See, there's the H pattern, large one, breaks underneath. The bar that takes out the low must try to get back and hold into the arch. It couldn't. It went to a lower low, and then it did that, and even now it's just barely above the low in the yield of 3.267, 32.67 was the low of the 29th of May. And we've gone as low as 32.17. That was on the 29th of July. This pattern here, is this the final arch formation before there's a break to the upside? Or is this just business as usual? Arch pattern makes a low, goes to lower lows on the left side, on the right side. I can't tell you right now than to say the MACD and stochastic have held very well, but it gives you a lot of room to the downside if there's a break below 32, 3.2%, and yet at the same time, a push to the upside with the histogram starting to turn positive says it needs to close decisively above 33.73, the high of the 31st of July. So we've gone through a bunch of things here that I consider to be important. Just a couple of stocks. Look, here's Google. I made the arch formation. It's trying to rally. It doesn't really look good. Let me just give you all time frames. That'll be fair. And weekly chart says, hey, unless I'm going to get back to 580 instead of being here at 569, it's just lower highs and lower lows. And if you look at price line right now, up 10 at 1291, making a potential peaky. I'm going to be watching this real closely because the stochastic is good, so is the MACD. I'll be right back straight after these messages.
take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Folks, programming here all day. Being Wednesday, you've got Larry Pesavento. We go all the way through until 7. I mean, it's just a fantastic lineup this afternoon. Just before I want to run out of time, a question about the SMHs. Hi, Basil. Do you think that is a good time to short the SMHs? Thanks. No. John, I think the best chance was way earlier. Wait for a bounce. You have to wait for the SMHs to probably test the 49.30 to the 49.70 area, see how that holds, and then that might be an opportunity. But right here, there should be a bounce, and the bounce might go into Friday. So let's go to our next caller. We've got Mike in Thailand. Hi, Mike. How are you?
Okay, Basil. How are you?
I'm well, thank you. So,
So what?
So you want to look at the VIX?
Yeah, I actually the VIX, and I got a question on the dollar. We're up against. First, we'll start off with the VIX. And,
okay, let me just do two things right now. First of all, I am going to have a chance today, thank goodness it worked out, to be able to do Daryl's show. Of course, I'll be doing my show, but during Daryl's time slot, and that's at 1 o'clock. Right. That's an hour later after Larry does his show, so stay tuned for Larry. Now, question on that's number one. Number two is I will go through some of that again in the show at 1 o'clock if you're able to listen. It might be very late for you, but I'll be able to do that. Meantime, right now, I just wanted to tell you that the stochastic and the MACD are very strong still in the volatility index. But the visuals that I have, the patterns that I'm looking at say that there's probably a rectangle formation forming, and that I suspect on the daily and the 120-minute chart, there's going to be further weakness, and that the 1441 to the 1353 area is going to be really important. A close below that on a daily basis says, you know what, we're going to take a little while before we have another serious bout of selling in the market, so there could be some rallies going on. But if it holds very well today or tomorrow, above 1441, especially at 1577, if it doesn't break 1520 in the next few days, even though the market's trying to bounce here, that would be very positive for the VIX and that would be bearish for the market. So shorter term, we took our profits in the volatility index, the way we traded it. I'm looking to get back in for the fourth or fifth time. I don't mind. These are nice gains. And at some point, you will not be able to get in because it starts to just climb every day. I don't think we're even close to that yet. I still think we're in the takeoff period, which can have a number of false starts. We've had fantastic gains. Peak D in the daily VIX index, a right shoulder possible failure in the 120-minute chart. Weekly is looking very strong. I suspect we're going to go higher and make higher highs and higher lows. Just on a shorter-term basis, that's the area I'd be looking into, at least nibble on one of the volatility index long positions, and that would be between. Well, you could even just tiptoe in at 1480, but really 1441 is going to be the big test.
Okay. Now here's what I want to. Here's what I'm getting at. It's those rising. Now I don't look at the stochastics as much as you do.
Okay.
Sorry about that. I know it plays an integral part of your work.
It does.
Here's what I'm looking at with the VIX. It's got rising lows. It's got rising lows. So that could be building cause to go up, to push up above that 1785 going back to April and the 1822 going back to March. If that happens, that's going to give everybody a big scare. Now, here's another thing.
Yep.
Here's another thing I got to say. If I have time.
Yeah. Mike, we're just about to run out of time. I don't want you to lose the words. So if you're able to call me back in the next hour just to finish your thoughts, or 2 hours time, that's fine. Otherwise, we'll look at it again. But I love your interview. So thank you for calling, and we'll follow up. Folks, stay tuned for Larry Pesavento. I'll be back in an hour's time to do a Daryl show. Stay tuned, and thanks for being here.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.